How are you guys doing? This is Ryan, welcome back to the channel. Today we're going to be talking about how I made over 70% in the market in just the last 16 months and essentially made $15,000 passive. Let's get into it. So guys, before I go into how I made this huge return, none of it was done by options trading, where you take out a contract. There's a lot more risk reward there where people get a lot higher rates of return by placing bets on options. And I also do want to preface that I am going to go over exactly how I made this high of a return in just 6 months. But I'll be honest, there's a little bit of clickbait to this because I want people to come in here to understand just how important investing is and not necessarily making huge returns that may not be the norm for most investors. So the average return of the S&P 500, and when I say S&P 500, that means the top 500 companies in the United States, over time annually have about a 7 to 10% return on investment. It depends on how you calculate it with dividends reinvested. Let's say 8%. So I would be just as happy to make this video if I had made 4% in the last 6 months as I am happy to tell you I've made 70%. The biggest reason for this is because my money is gaining value over time and not being eaten away by inflation. Now, some people say inflation is from 2 to 3% annually, and then there's other people who actually believe the government is not being honest with those numbers, and that inflation could be as high as 5% or more. And that's really because we rely on the government for the statistics that tell us what the rate of inflation is. And they use what's called the Consumer Price Index, where the government goes out and tracks the cost of about 20 items a year, and from that calculation they decide how much purchasing power our dollar is losing every year. Now, over time the government has moved this goalpost. This isn't a conspiracy. The Consumer Price Index has actually changed over time. And for example, it no longer includes things like healthcare costs and things like that. So using prior metrics, some people believe that inflation is actually over 5%. And if you use the definition of inflation, meaning more money added into the system, more money printed essentially, it's more than 2 to 3%. So anyways, long story short, we need our money to make at least 3 to 5% a year so we don't become poorer every year. And investing is really the only way to do it. You may not think that's fair, but it's the world we live in and the current economic model we operate in. So becoming an investor is so important for you and your family to protect your wealth for many, many years. And that's why I'm saying the title may have a little bit of clickbait to it, but the goal really is to drive the point home on just how important investing is. Anything beyond the rate of inflation, you're becoming wealthier in a very passive way. So if I take you back to July 22nd, it's when I re-entered investing in the stock market in my day trading account with Robinhood. I never stopped my retirement investing into my 401ks and my IRAs, which I'm not going to cover in this video. And while those accounts have had great returns, over 20%, nothing has compared to the 70% return I've been able to get in the Robinhood account. So on July 22nd, I had all my funds secured to buy the property I now live in this neighborhood, and I wanted to get back to building my wealth faster than I could in a savings account, which most savings accounts with the larger banks pay you 0.02% or some ridiculously low rate. I currently use Wealthfront for my savings. I get about 1.7% return for my cash, which is not keeping up with inflation, but it's at least not deteriorating as fast as using it with, for example, Bank of America, who I also bank with. So I had been following the stock market, even though I wasn't actively picking stocks to invest in. There was a lot of volatility at the time with the trade war, and just stocks were not doing very well. At least a lot of these large cap stocks that I was interested in. And I sat on the sidelines and I watched Tesla, which has been major news lately, go down to $177 a share. And look guys, none of this is financial advice, and this is actually quite risky to do, but it's worked out for me. But whenever a stock is getting beaten up on such bad negative news, things tend to get oversold. The news really likes to harp on bad things, so what you'll have happen is that it'll scare a lot of people out of a position. So people were selling their Tesla stock like crazy, and also there became a large short interest in the stock as well. A lot of big names were out there trying to profit on Tesla's demise, and for whatever motive, they felt like the stock was going down and way overvalued at the current market cap at the time, which was under $40 billion. So negative sentiment kind of piques my interest. I've gotten burned in investing in things that had such bullish sentiment, so I've tried to be more counterintuitive with my investing instincts. So I look for things that are really beaten up, and a lot of times they can be bad investments. But I will take a look because I know there's a high opportunity. If it is oversold, there's a great opportunity for a high rate of return. And while I've always been a fan of Tesla and Elon Musk, but I always felt like it had a lot of hype behind it and a lot of things still to prove as an investment. But this opportunity of negative sentiment, I feel like, was opening an opportunity to invest in someone like Elon Musk, who's doing a lot of great things for humanity. And me as an entrepreneur, or compared to Elon Musk, I'll call myself an aspiring entrepreneur. I look up to him in ways on how he's been able to build amazing businesses that are so hard to do to revolutionize the car industry or to make humans a space traveling civilization. These are very hard things to do. And like I've mentioned in previous videos, he says that you will get paid in the direct proportion of the complexity of the problems that you can solve. So with this huge rise in Tesla stock price, he owns like 20% of Tesla. He has gotten paid billions and billions of dollars, which is pretty crazy. So I have not made that much money. But at the time, the money I wanted to invest, rather than diversifying it, I got ultra concentrated on trying to acquire as much Tesla stock in the low 200 range that I could. And I felt confident in doing this because while the sentiment was bad, the fundamentals were good. And I laid it out in prior videos about all the bullish things they have going from the company as far as growing gross profit margins, scaling production of the vehicles, and the Tesla Model 3 has been like the iPhone moment for cars. It's a smart vehicle that relies on a lot of software that can continue to keep on improving the car while you own it. And I own a Tesla Model 3, and I believe the revolution has begun similar to how iPhone replaced the Nokias or the other kind of cell phones that existed prior to. So again, bad sentiment, but good fundamentals. There was a lot of risk associated with it, of course, but the sentiment was just too bearish. So if I just followed the strategy of just focusing on Tesla and only buying Tesla, which I was for a while, but then I did choose to diversify, it actually hurt my returns, but at the same time it offset some of my risk. So right now Tesla's trading at $783 on Friday, February 14th, and my total return is 239%. I did sell some of my Tesla shares around $500, which also hurt my returns. But again, making over 7–10% return for me is amazing, and offsetting some of my risk at this point is worth it. So two things to really take away from looking at Tesla there is bad sentiment, good fundamentals, creates a good opportunity, and finding ways to be ultra concentrated in investments you really believe in can also have higher rates of return. And I was able to make one other really good call. And guys, a lot of this is dumb luck. I'm no investing guru or anything, but I've been investing ever since I had enough money to cover my bills. I knew investing was important. And that's something else I really want to talk about in this video is if you're not investing, you know, what is stopping you? What is stopping you? Do you have extra cash sitting around and you're just scared to invest it? Or are you not saving enough money? Are you living beyond your means? Or are you just more of a consumer than an investor? I own a bunch of different companies here that I consume, but I also want to have ownership in them as well because I know how effective they are, and these are good business models that are going to last for years and years and years. So I always tell people that are looking to start to invest, beyond just investing in ETFs, you know, an ETF is exchange traded fund that gives you broad access to the markets. It offsets your risk a lot. But also, if you're a consumer, look at what you're consuming and why it is effective and why you like to consume it, and maybe start there with your investments. Not financial advice, just ideas. And I really just want the point to come home that if you're not doing this, you're really hurting your future self. If you saved $10,000 and put it in the S&P 500 and didn't touch it for another 30 years, that would be worth over $130,000 at a 9% return. And if that money just stayed in cash, you would lose at least 2% every year. In school, they don't talk about this near enough. It's so important. It's literally saving your future self and giving you a life you can be happier with in the future, giving you more freedom. Love money or hate money, it allows you to have more freedom. So, getting back to the other good call I've made, and this sort of has synergies with Tesla because it is really disruptive innovation. Disruptive innovation is something that's going to grow much faster than consumer cyclical stocks or anything else like that. So something that's going to disrupt the future of the world as we know it, like Tesla with battery vehicles and autonomous driving. I also am a believer in cryptocurrency, and I've traded the market for years. I've made and lost money with it, but I've never let fear of losing money stop me from learning how to invest. Now, there's a lot of investors who wouldn't touch cryptocurrency with a 10-foot pole, I understand, but we had a great opportunity a few months ago, and I made a video saying that I was buying cryptocurrency at this time because looking at the broader trend of the market, we made a new low against the overall trend. And I went heavily into buying coins like Bitcoin Cash and Ethereum because last year was a great year for Bitcoin Core, the biggest coin in the market. And when that has a good year, it gains huge amounts of market dominance. Over 70% of the market cap is all in Bitcoin Core. But once a large dominance like this is met for a while, investors will look to diversify into other coins. So that's where I positioned myself at this time, and I bought Bitcoin Cash and Ethereum. And I built a dollar cost average price into Bitcoin Cash at $220, and I've been able to make 120% return in a short time. I did take some of that money and I put more of it into Ethereum. I did sell some for a few reasons. One, I just felt like Ethereum was more underpriced to Bitcoin Cash. And also I'm just concerned about a few things going on in the Bitcoin Cash project, which I won't go into specifically, but it was a determining factor as to why I diversified. And I have a majority crypto position to Ethereum. To the rate of return I'm starting to see in Bitcoin Cash, which I'll show you now. I bought 29 Ethereum at a dollar cost average of $160. and we're at $270 today, giving me a total return of 69%. Guys, this is incredible, incredible rates of return. So again, going back to that Trello chart, we are making a new low undervaluation against the overall trend. Ethereum in a year's time, for example, was flat versus Bitcoin Core was up 2 times on the year. Looking for depression in prices is what has been able to help me make a lot of money. Looking for things that are just overly depressed in price. This is a risky strategy. I also do dividend growth investing, which provides lower rates of return but a lot less volatility, but it's also a great way to invest over time. You're investing in companies that have so much free cash flow. They can pay you every quarter, every month, or whatever their dividend structure is set up. These are very productive businesses to invest in versus Tesla and cryptocurrency, which Tesla is now starting to show free cash flow and signs of being profitable in the near future. And then cryptocurrency, which is very different, grow more by adoption of using the utility. It does have ways to throw off cash flow. I'm not going to talk about that now. But these are very volatile assets that have the ability to disrupt the world as we know it going into the future. Now in this portfolio that's made me 70% return, I have like 15 other stocks I've invested in, and most of them have made good returns as well, but not the major catalyst and didn't have the amount of cash that these investments have had in to make me that much money, but they've also performed well, providing me returns. So another reason why I've been able to make such great return is because we are in a bull market. Investing in a bull market makes us all look like geniuses. We're not. We will be humbled one day. There will be a recession. There'll be very tough economic times in the future. But something I do look at and I will share here, and I think it's worth considering, and I've said this in prior videos, but I really want people to think about it and critique me on it and see if I'm wrong. But if we look over the last 100 years since the Industrial Revolution, we have these at least 20-year runs in the stock market. Bull runs. They have little recessions on the way, nothing minor, multi-year like the Great Recession of 2008. That's kind of how these stock runs climax. And then we fall into a bull commodity cycle where commodities will perform really well, like gold, silver, oil, things like that. And if you look at the Industrial Revolution in the early 1900s, we had a bull run up into the Great Depression. Everyone remember the Roaring 20s? And then we fell into the Great Depression, which was one of the toughest economic times we've ever seen. And that lasted really until the mid-1940s. And stocks did terrible and commodities did well. So well that people couldn't afford food, which is very sad. And then we ran into probably one of the greatest economic periods following World War II, the baby boomer generation, where stocks ran from 1945 all the way up to the 70s. And then again, we had a commodity run. Something like gold go from $25 an ounce up to $800 an ounce in a year's time. Stocks did not do very well until the early 1980s. And then from the early 1980s, we ran all the way up until the dot-com boom, another 20-year run in stocks, and then we had another boom in commodities, where we had gold go from $300 up to $2,000, and stocks stayed flat. It took the NASDAQ many years to get back to the highs that it got to during the dot-com boom, and we still see stocks that haven't recovered to those levels, even today. I think that's something very important to look at and why I'm bullish for the next decade. I believe we're in the Roaring 20s 2.0. That's my investing thesis. Not financial advice, entertainment purposes. We'll see if I'm right. But I'll kind of wind it down here and just say thank you guys so much for watching. And if you haven't already, please make sure to give this video a thumbs up, subscribe to the channel, turn on the notification bell. I post videos every Sunday documenting my investing journey. I'm very transparent with it. So I always say it's cheaper to learn from other people's mistakes. So if I make mistakes, you know, it's really good to watch other people. But eventually I think you do have to get out there and practice and put some skin in the game, invest some money to really learn how the market and investing works and what it feels like as an investor to get those butterflies when you take risks. If you want to follow me daily, I'm on Instagram as well. I'll put my handle here, somewhere over here. Leave a comment down below, and I'll see you in my next one.